To the markets now, and the stock market lost ground for the fourth consecutive day. To find out what's behind the slump, I spoke to Marcus Padley from Patersons Securities. Marcus Padley, miners again the biggest losers on the market. How much was that to do with the Chinese trade figures?
Well, all to do with it, I think, Andrew. The market started coming off the moment the trade figures were announced. A bigger surplus than expected thanks to a lower level of imports. And the resources sector immediately came off. The iron ore sector took an absolute belting today. We saw things like Sims Metal Management down 6.9%, BlueScope Steel down 6.4%, Arium 5.0%. It's not a good look. Coal producers didn't do any better either. And we've got the Chinese GDP and industrial production numbers coming up on Friday, which now seem to offer more risk than reward.
A profit warning from Platinum Asset Management. How unsettling was that for investors?
The share price was down 7.8%. There are some weird movements today, actually. I think people are expecting a number of profit warnings coming into this results season. Platinum Asset Management is sort of rather predictable because they're what you might call a stock market stock. They rely on the stock market going up, equities going up, and of course they've been going down. So it sort of puts a bit of a warning over stocks like the ASX, Iris, Macquarie, all stock market orientated stocks. And I think people are worrying about a number of other confessions prior to the beginning of the results season at the end of the month.
Now, the corporate watchdog is taking a look at the so-called creep provisions for company takeovers. Are we starting to see a bit of a fallout in stock prices because of that?
I think we are. A lot of those bids that were supposed to happen, Qantas was supposed to be forming a defence team. We were also supposed to see a takeover of Fairfax, all things that haven't happened. And I think as the market does this and uncertainty in the market remains, private equity seems to have backed off completely. And asset creep provisions just stop people creeping up the share register. It's not a positive sort of thing for takeover stocks. And we've seen, the fizz come out of the market. It's really just the market falling kills the bid speculation.
And finally, the release of Alcoa's results in the US signals the start of the US reporting season. What significance is there for our market there?
Well, they weren't a good set of results for the AWACS joint venture, which is what Alumina holds with Alcoa. Alumina is the Australian-listed stock, fell over 6% today on the back of those results. And they're reporting the same sort of thing as Alcoa reported when they fell 24% a day ago, that it's all down to generally weak economic trends rather than company-specific stuff. It's down to commodity prices falling, and it does put a bit of a warning signal again over the resources results that are coming up.
All right then, Marcus Padley, thank you very much for your time.
My pleasure, Andrew.